Okay, we'll start. Good morning, everyone. So, in continuation with last class, we have discussed about introduction to GST, and then we have seen what are the types of GSTs that we have, and then position of goods in GST compared to the earlier indirect tax system. So, in that I told you two goods are not covered under the ambit of GST, two types of goods. What are the two types of goods? Number one, alcoholic products, three alcoholic products, that is alcoholic liquor for human consumption, undenatured extra neutral alcohol, rectified spirit used in manufacture of alcohol. Then 5 petroleum products, crude oil, petrol, diesel, aviation turbine fuel and natural gas. So this is the discussion we had in the last class, and we have some other things to be seen. So please look into your book, page number 2. Already I completed this discussion. So what is the difference between direct tax and indirect tax, and what were the indirect tax in the past and the major indirect tax in the present, and major features of indirect taxes. It is given in the book study material as one paragraph, but it's not important and all, we already know that. So it is one of the major source of revenue to government. Yesterday I told you that point, and usually it is not on the income, but it is on the revenue. For example, if I have a sales of 10,000, my purchase price is 8,000. So 10,000 minus 8,000, 2,000 rupees is my income. On 2,000 am I paying GST, or on 10,000 I need to pay GST? On 10,000 I need to pay GST, but we have the system of input tax credit which will take care of that. But what if I am selling at loss? For example, my purchase price is 8,000 and I am selling at 7,000. Am I required to pay GST even then? Yes, I have to. Why I should pay? Because GST is not on the profit or not on the net. GST is always on the gross. Of course, we have a concept of input tax credit. So what is input tax credit? Tax paid on purchases. Tax paid on purchases which can be taken as credit and adjusted against the tax payable on sales. For example, you take a trader. There is a trader who is having some inward supplies and some outward supplies. Inward supplies means purchases pa. Inward supplies means purchases. Outward supplies means sales. Outward supplies is sales. Whenever he is making some inward supplies, he need to pay some amount to the supplier, correct? Am I right? You are the trader, you are making purchase, you have a creditor, you have to make the payment. Let's take 10,000 rupees, 10,000 plus 1,800 as GST. Whereas on outward supplies, when you are making to your customer will give you some money. So say that is 15,000 plus 2,700. Okay. So what is 1,800? Input tax. What is 2,700? Output tax. Okay. So tax on inward supplies is input tax, tax on outward supplies is output tax. Now what we can do here? So this 1,800 we call as input tax credit. Input tax credit. Okay. So we can take credit and we can adjust it against the liability. We can adjust it against the liability. What is this 2,700? Output tax payable. Output tax payable is 2,700. So this input tax credit we can set off against the output tax payable. Is it clear? So what will be the net GST? The net GST payable to government will be 2,700 minus 1,800, that is 900. So you can understand it anyway, but you need to understand this concept. Let's see from accounting point of view how it works. As and when you make purchase for 10,000 plus 1,800, what is the journal entry for purchase? Purchase account debit, Purchase account debit, how much? 10,000. Input tax credit account debit, 1,800. Means you are recognizing an asset. It's a current asset. Asset shows a debit balance. You are recognizing a current asset here. That is input tax credit. Actually, it is receivable. Why it is called as receivable? Because you are going to adjust this 1,800 against your liability, which is like as good as, that is a benefit which is receivable. So therefore, we are calling it as input tax credit account debit. Okay. So asset, we recognize the asset. 2, supplier account, because we need to make the payment to the supplier or to the creditor, or if you have already made the payment to bank, whatever the case may be. How much is that? 11,800. Understood the purchase entry, everyone? Now what is the sales entry? What is the sales entry? A debtor account debit or bank account debit, correct? So 17,700. To sales. To sales, how much? 15,000. So are we going to recognize 17,700 as sales? No. So that's where there is a difference between the invoice value and taxable value. Have you filed returns? GST returns, definitely you would have done. And in your articleship, when you file GST return, there you have invoice value and taxable value. Have you ever come across this? While creating the invoice in GSTR1, it will ask you to show invoice value and taxable value. Now in this, you tell me what is invoice value and what is taxable value. 17,700 is the invoice value, but the taxable value is only 15,000. So we need to recognize 15,000 only as sales. Then what is the 2,700? Which is nothing but your liability. So to GST payable. So therefore we have an asset. Input tax credit account debit, that is 1,800. We have a liability 2,700. So now what you are going to do, we need to pay the liability. Liability shows what balance? Credit balance. Now make a debit. GST payable account debit. How much? 2,700. 2. We will set off, use the asset to ITC account. So now the difference is there. 2,700 and 1,800. What is that? 900. That is to bank. We are going to make the payment. Okay, this is the accounting way. You can also understand it like a cash flow. For example, you are the trader, you are receiving 17,700 from your customer. In that 15,000 rupees is your sales, you recovered. Now what is left? 2,700. Already at the time of purchase you have paid 1,800. That also you are recovering now. Why? Because already you paid now at the time of purchase. So you are recovering now. What is left? Which you will give it to government. So that also you understand. So input tax credit is basically a benefit which they are giving so that the person is not required to pay the tax on the entire gross, but they need to pay only on the value addition. Actually here what is the value addition? What is the value addition? 5,000. What is the rate of GST? 5,000 into 18% is what? That's why GST is nothing but a value added tax. Are you getting this? Clear? Whatever is the value addition, ultimately on that value addition only the tax should be paid. But how it works? Directly we can take value addition and pay now. No, it's not going to work like that. First see the sales or outward supply value, on that multiply the GST minus inward supply into GST, because we don't have a single rate of GST. If we have a single rate of GST, actually we would have done in a different manner. There is no need of input tax credit. GST is always on value addition. See, sale price minus purchase price into GST, job done, and this will become 120 mark subject, and there is no need of indirect taxes at all. You got it? Seriously. Because what's there beyond this? Sales minus purchase into GST, single rate means there is no issue at all, correct? So in income tax, maybe for 20 marks they can give GST and they can go. The portion this much will not be there. But the problem here is that there are multiplicity of rates. Different products are taxable at different rates and services are taxable at different rates. So then we cannot take always, for example, your raw material is at 5% and if your finished product is at 18%, how can you take sale price minus purchase price into 18% or 5%? The confusion will come. So that's the reason why they are making it simple. Sale value into GST 18% minus purchase price into 5%, not 18%, 5%, because you are purchasing at 5% rate of GST. So that difference will be your liability. Is that clear? Understood? Now, so coming back to this, whether GST is going to be on the revenue, whether indirect tax is going to be on the revenue, yes, of course it is going to be on the revenue, that is gross collections. And we know this liability is on one person and the burden is on the other person. And wider tax base, that also I told you, lot of people are covered under indirect taxes. Income tax, if you see, very less number of people, because they may have a turnover, but if they don't have sufficient profit or income, they are not required to pay income tax, correct or not? But GST is not like that. GST is based on turnover, so naturally lot of people will be covered into the ambit. And it promotes social welfare. This yesterday I told you. On tobacco they are levying more and more taxes, because of which it will promote social welfare. Okay, so it's a bullshit. And it is regressive in nature, that we know. Irrespective of the income, they have to pay the same amount. So these are the features of indirect taxes. And this we already discussed: excise duty, customs duty, service tax, sales tax. And milestones in implementation of GST in India. It all started in 2004. Dr. Kelkar task force was appointed for the purpose of making a complete rehab into the indirect tax system in India. So this Dr. Kelkar task force recommended the need of GST, one single tax. Accordingly, in 2014, but the problem in India is that we cannot bring in GST just like that, that is dual GST just like that. Reason, there are certain powers which are given to union and certain powers given to state. So constitutionally it has been drafted like that. Now the constitution has to be amended, because GST is a parallel levy both by center as well as state. For that reason they have amended the constitution first, and that constitution bill, amendment bill, was presented in 2014, and thereafter in 2016 the Constitution Amendment Act has happened. After 2016 Constitution Amendment Act, then the GST law came in 2017, because just like that GST law they could not bring it, so Constitution Amendment was required. So Constitution Amendment was in 2016, and then in 2017 only GST law came with effect from 1/7/2017. This already you know. And which is the first country across the globe to implement GST? France. France, not India. After 160 countries we implemented. Okay, so we cannot take any credit like we are only great, etc. and all. Literally we copied, but while copying we did not copy from one place. That is a problem. What we did, it's like you are an author, okay, new author. When you are a new author, what will you do? You take 4 or 5 books, you take information from every book, and you will create one new book, correct? That's where today becoming author is very, very easy, and no much difficulty is there. Even ChatGPT, Claude, etc. and all also will do that. And like that, what our Indian government did, so they copied GST in multiple countries. When they copied in multiple countries, it did not fit. You understood? So it's like, if you copy from one country, it's okay, we can modify. They copied from multiple countries, place of supply from one country and the system of credit from other country, like that and all. And thereafter they see, we also have certain things. So because of which it took around 4 or 5 years in order to make the structure work. Okay, even today it is not that great. If you ask me, sir, now everything settled, sir, no, 60% only settled. Remaining 40% of the issues are still there. Okay. Then next, this already we discussed, one CGST, one IGST, one UTGST, etc. And this I told you, GST is nothing but a value added tax, and there is a continuous chain of credits. How continuous chain of credits? For example, manufacturer will pay GST, in turn recover it from the wholesaler. So wholesaler will take the credit. Again wholesaler will pay the GST. Retailer will take the credit. Retailer will pay the GST. consumer cannot take the credit because the ultimate tax burden is on the consumer. So that is this continuous chain of credits. Is there a possibility that this chain will break? Yes. When? That's what. Credit is not available. When credit is not available, you would have studied in intermediate blocked credits. Even though it is used for business, but you cannot take ITC on certain inward supplies. Or you would have also studied this point, if your outward supply is exempted, you cannot take ITC on your inward supplies, which means this continuous chain of credits in multiple places it will be broken. Okay, because when, see, logically I am purchasing, I can take credit, I am making sale, I will adjust the credit, correct? This is a system of credit. On my purchases, I cannot take credit in some cases. Then naturally the chain will be broken. So I have to pay GST on my entire sales. There is no credit. Naturally that I will recover it from my next person. Am I right? That's where today the real estate has suffered a lot because of this issue. If you take residential real estate projects, commercial projects, residential projects. Residential projects means apartments, house, etc. and all. This residential real estate projects, the rate of GST is 1.5% and 7.5%. The effective rate is 1% and 5%. So on the gross value of the flat, they have to pay 5% or 1%, depends. If it is affordable housing means 1%, non-affordable means 5%, which we will be learning in future, don't worry about that. But this rate comes with the disadvantage that they cannot take ITC on their inward supplies. What are the inward supplies of a builder? Cement, bricks, building material, painting, plumbing material, electrical fittings, N number, correct? Can they take ITC on that? No. When they cannot take ITC, what they will do? What they will do? Whether builder is our father-in-law, to not pass on the burden. Definitely, nowadays father-in-laws are passing on the burden very much. So therefore, definitely they will be recovering it from us. Are you getting this? And now people are complaining, sir, we purchased the flat after completion certificate, sir, but the builder is charging me GST. So is it correct or not? At least monthly once I will get this query. So what we can do? So they have to recover that. Yes, they should not charge you GST whenever you are buying the flat after completion certificate. But it is not about on the flat they are charging GST, on their material, on their raw material. So builders will not do some yagas or homams wherein building will directly come from sky. No, they have to construct it. They have huge expenditure. So whenever they have to pay GST on that, they cannot take credit. Naturally it will be added to the cost. Correct or not? And it will be in turn recovered from the recipient. That is the disadvantage of not having the credit. When you don't have credit, what will happen? Your purchase cost will increase. When your purchase price increases, naturally your sale price also will increase. So because of which you have to increase the price of the output. Got it? Then, so who will have the final burden? Always on the consumer. And it eliminates cascading effect of taxes. What is cascading effect of taxes? Tax on tax. Just now I told you. When credit is not available, what will happen? You will add it to cost. When you add it to cost, means the tax paid on purchase you are adding to the cost. Then again it will be included in the sale price. When you compute GST on sale price, already in the sale price there is a tax component. So there will be tax on tax. So but when credit is available, you will not be adding this tax into your purchase price, because of which the sale price will be reduced and there won't be any cascading effect. Is that clear? That is, this eliminates cascading effect of taxes. Taxes subsumed into GST, already we know, we discussed dual GST model. How GST is a cure for the ills of existing indirect tax regime. So earlier indirect tax system had some issues, because of which GST they have brought in, but this is not relevant for you because you are not learning what is earlier indirect tax system, so don't bother about it. I just gave you it for reference purpose. None of this will come in exam. Whatever we are learning for the yesterday's class and today's class will not come in exam, don't worry, okay. Then Intra versus interstate already we discussed, types of GST we discussed. Look into one small chart in that page, page number 8. On import of goods, which law will be applicable, GST or customs? Customs law will be applicable. In customs, there are a lot of customs duties, like basic customs duty, social welfare surcharge, anti-dumping duty, safeguard duty, anti-subsidy duty, like that lot of customs duties are there. But each and every customs duty is not one. Customs duties, there are multiple components, and when we do the computation of customs duty, you will know one full page it will take to compute the customs duty. You understood? That many things are there. It's not just one. In that, we have now IGST also. Why? Connected to yesterday's class. What I told you yesterday? CVD and SAD was levied to counterbalance the excise duty and sales tax. As now excise duty and sales tax got subsumed into GST, so in the place of CVD and SAD there will be IGST. So on import of goods, are we required to pay any GST? Yes. Which GST? CGST, SGST, UTGST or IGST? IGST. IGST will be payable. Is that clear? Same way, on import of services also, naturally, services, no customs, only GST. So therefore, IGST will be applicable. Is that clear? So tell me, what is that we have discussed so far? Import of goods and import of service. What is the tax that is applicable? IGST. So there is a foreign territory. You are in state 1. When you are importing goods or services, IGST will be applicable. Within state is intrastate. So what is the type of GST? CGST, SGST. State 1 to state 2. Interstate, IGST. Within state 2, again intrastate, CGST, SGST. State 2 to union territory, IGST, because it is interstate. Within union territory, CGST plus UTGST. Now, whenever there is export of goods or export of services, again IGST will be applicable. Is it clear? So on import of goods, import of services, export of goods, export of services, what is the type of GST? IGST will be applicable. But in case of export, we have a relaxed policy wherein even though IGST is applicable, but there will be a relief, like you will get a refund. You pay and you will get the refund. Sometimes you don't have to pay, because this is called as zero rated supply. Exports will be treated as zero rated supply. What is the meaning of zero rated supply? Please don't interpret it like literally zero rated means rate is zero. No, not that. You have to pay GST, but the burden will become zero. How the burden will become zero? For example, you are making export 10 lakhs. On 10 lakhs, 18%, 1,80,000 you are paying. Thereafter, you will get the refund of that 1,80,000. So what is your tax burden? That's why it is called as zero rated. In case of exports, we have this privilege. Okay, but GST is applicable. Yes, GST is applicable, but we have a benefit called as refund. Okay, next. This already I told you previously, Jammu and Kashmir was a state, but now it is treated as union territory. We have two union territories. Jammu and Kashmir state is now divided into two union territories. What are they? Union territory of Jammu and Kashmir and Ladakh. Jammu and Kashmir union territory is union territory with state legislature. Ladakh is union territory without state legislature. And this discussion we have made. Import and exports versus GST. Just now I told you. On import of goods, whether IGST is applicable? Yes. First we need to pay customs duty, and there is some cess called as social welfare surcharge. SWS means social welfare surcharge. If you want, you can just write there. SWS means social welfare surcharge. Okay, I wanted to ask you one generic question. What's the difference between tax and cess? Good, yeah? Cess is levied for a particular purpose. Cess, surcharge, etc. for a particular purpose means that revenue should not be used for any other purpose. For example, health and education cess means it should be used only for health and education, it should not be used for any other purpose. To construct a statue or to construct road or building, etc., they should not be using it. But tax is generic, they can use it for any purpose. Okay. So here it is social welfare surcharge which is levied on import. So on import, what is it? We have basic customs duty, IGST and social welfare surcharge. Got it? And we have others also, but I wanted to just convey to you that there is IGST. On export of goods, basic customs duty not there, social welfare surcharge not there, but IGST is there, but the benefit will become, like the benefit will accrue, because of it the burden will become 0. Got it? For the purpose of GST, export of goods or services are treated as 0 rated supplies but not treated as exempted. 0 rated. So I told you the burden will become 0. Next, suppose if export of goods is dutiable under customs, we will have basic customs duty, and in that case also IGST will become 0 rated. Social welfare surcharge is not there on export, only on import. Again we will connect this point in customs when we are discussing customs. Then what is the purpose of IGST Act? Why they need to give separately IGST Act? Simple. Whenever interstate supply happens, we should know which government to collect the tax. For example, sale happens from Tamil Nadu to Karnataka. Already enough of problems we have between Tamil Nadu and Karnataka. Again, GST should not become a problem wherein they cannot sit and fight as to who should collect. That's why central government will collect. So which means we cannot bring it into CGST. So there is a separate law that is required. Also, whether it is intrastate or interstate, this dispute is huge. Because what is the criteria where the supply changes from intra to inter or inter to intra? Place of supply. Place of supply. This place of supply, if we interpret wrongly, we end up paying CGST, SGST instead of IGST. I'll give you one classic case. So I have one client, so who is an exporter, okay, and what they did is that they paid CGST, SGST, they paid IGST instead of CGST, SGST. So total somewhere like 24 crores something is the liability. 24 crores they paid IGST. Okay, they did everything pakka. They filed it on time, GST or 3B on time, and they paid, everything is done. Later on, state GST department is there, Tamil Nadu state GST department. They served a notice stating that it is an intrastate supply and you did not pay GST, SGST. So for which they have raised a demand along with interest, along with penalty. And then this person came to me and is telling, sir, we paid correctly only. No, sir. I said, no, you did not pay correctly, you paid IGST. Okay, sir, but CGST plus SGST equals to IGST. Yes, yes, sir, you are right. Then I paid correctly only. No, sir. No, sir, you did not pay correctly, you paid to IGST. How does it differ, sir? Because when you pay IGST, 50% will go to central government, no issue, but the remaining 50% will not go to Tamil Nadu. It would have went to some other state which you have given as place of supply. So that's why Tamil Nadu is getting offended. 24 crores means half is 12 crores. It is their money. That 12 crores they are sacrificing to some other state. Why will they do that? Are you understanding? And therefore that's the reason why they are asking this. Can we do anything with respect to that? Yes, pay 12 crores. Pay 12 crores and get the refund of the 24 crores. 12 and 12, CGST 12, SGST 12, and we'll get the refund of the 24. Then he said, fine, I will do that. But they are asking me to pay interest and penalty. Is it payable? No. It is revenue neutral. We have a relief. So we went to appeal So department did not agree. We went to appeal, commissioner appeals, and luckily commissioner appeals agreed. They said yes, fine, you just pay and you claim the refund separately like that. Thank God. So interest and all not there, and further litigation did not arise. So this 12 plus 12 crores was paid and refund was applied. And he is thinking refund will be like, the moment you cancel order in Swiggy, instant refund you will get, na. Swiggy or Myntra and all, when you return the product, instant refund. So he is thinking of that sort. He said, sir, we applied, sir, still we did not get the refund. After 2 days he is asking me. I said, there is a statutory time limit of 60 days, sir. 60 days. If they are not giving within 60 days from the date we made application, then they will be giving us an interest at the rate of 6% per annum. That too from 61st day. And now 1.5 years over. Still refund did not come. And he started asking, and then I took him in person to GST office also. Annanagar GST office only. And there no one is responding. They are telling anything you send mail. So you raise a ticket, support ticket you raise in the this GST platform, and no one is responding. At last I tried to manage to get the JC Joint Commissioner, and I went and made him sit before the Joint Commissioner. Joint Commissioner said, okay sir, we will check and we will process. Okay. So thereafter he is daily morning he is getting up and he is praying to God. God, I need to get my 24 crores, because his 24 crores is now blocked. Yes, he will get interest. How much? 6%. But the opportunity cost of capital is 18%. Are you understanding? But business, which business you will get 6% interest loan, pa? You tell me I need 100 crores now immediately. No, na. So if 6% rate of interest is there, I will give my kidney, heart, head, everything I will pledge, and I need 100 crores. Okay. I will take and go and settle somewhere. I will run away. Definitely, why will I stay here? So therefore, no one is giving at 6%. Na? The issue is that. And our opportunity cost of capital is 18%. And he is daily sitting and crying and praying to the God. That is the problem with respect to changing the place of supply. The place of supply is so crucial. And we may think, okay, what is there? But it has a huge impact. Our money is blocked in the government. Okay. So to determine the place of supply of goods and services, to determine interstate versus intrastate supply, to make provisions for levy of supply which are under the exclusive domain of central government. Then this discussion we have made, Constitution 101st Amendment Act, what is the position of goods, etc. Now look into GST Council. As indirect tax, GST is a dual GST, which means who should take the decision? Can we ask central government to take decisions? Definitely no. Just imagine the entire state's GST decisions are given to Nirmala Chechi. Okay, what will happen? Gone, that's it, that's the end. And therefore no. So state should have the decision making power. That's where a common body got created called as GST Council. Article 279A of the Constitution gives the powers and roles and responsibilities for the GST Council. Who will be there in GST Council? It's intermediate topic only. Who will be there in GST Council? Which finance minister? Union Finance Minister. One Union Finance Minister. How many states? 31. Those three also you should have. 31. 31 state finance ministers. Correct? Next, for union territories, there is one Minister of State Finance. Okay, one MP, Union MP, who will be appointed as the support minister for finance. So total 33 members will be there in the GST Council. These 33 members will meet for taking the decisions. And to take a decision, what is the majority that is required? Simple majority or 3/4 majority? Like a special resolution majority. What is special resolution majority? 3/4. 3/4, correct? 75% majority is required to take the decision. 3/4 majority is required. And in that also, central government vote is not having the equal weight of state government. Central government vote will be 1/3 weight only. But state government vote will be 2/3 weight. Means actually who is having the key role in GST council? State government. Okay. But the problem is that not every state finance minister is educated. Okay. So some people who do this settlement, who go into some other people's house and threaten, etc. and all, if they start becoming finance minister, nothing. Okay, rubber stamp people, they are not educated, nothing. And when they become now finance minister, because the fate in this country is that there are many educated people, but those educated people will not be given the ministry. And those who are having deep pockets, those who can spend for the party, they will be getting. I am not talking about Tamil Nadu alone, I am talking about across the country, same story. Okay. And when these people are going and sitting there, they go and sit there for samosa, tea, etc. And they will be thinking which scam we can do in your state, what is happening, how are you earning money, like that only. But productively they are not taking decisions. Okay. If they take now, it will be good. So states is having more weightage. The weighted votes are 1/3 for central government and 2/3 for state government. Decision considered to be passed if 3/4 majority is there. And quorum, what is quorum? Minimum number that should be present in order to call it as a valid meeting. What is the minimum number? 50%. What is the total number I told you? 33. 33 into 50% is 16.5. That is 17 members should be there. Okay. And you can see illustration on voting. There is a proposal. And mostly what are the decisions are that they will take? Tax rates, mostly tax rates, exemptions, what exemptions to bring, what exemption to withdraw, okay, and change in the procedures, etc. Important issues like tax rate, exemption, dispute resolution, etc. These decisions. And there is a proposal to increase the rate of GST on smartphone from 18% to 28%. Right now 18%, and now smartphone has become a necessity. Whenever things become necessity for the people, so finance minister likes that, so that they can increase the rate and people will be using it. For example, initially Swiggy, Zomato and all, no one was using. Where? It was not. So we used to go to the restaurant happily, we will order, we will eat food and come. And suppose if family requires, the father will go and he will buy the parcel and he will be bringing. That was good olden days. But now, morning we get up and we will search for what is the offer that is available and we will be ordering from Swiggy. Swiggy has become part of our life. And if not Swiggy or Zomato, many of us would have dead by now. Okay. So that much we are dependent on it. When we are dependent on it, finance minister also understood, okay, fine. So therefore, GST was levied. Even if the restaurant is unregistered, not paying GST, but if you order from Swiggy through that restaurant, you have to pay GST. Super concept, no? Restaurant is unregistered. You are ordering from that restaurant through Swiggy, even though the restaurant is unregistered, but that will be subject to 5% GST. Got it? Like that. So smartphone has become a mandatory, because night before sleeping you will have smartphone. Morning as soon as you get up, you will not check whether you have dress on your body or not, but mobile you will find. Okay. So that much it has become part of our life, and on that they wanted to increase the rate from 18% to 28%. Of course, Union Finance Minister will be very happy and voted in favor. And Union MP and 4 state finance ministers voted in favor and 13 voted against. Total 17, 13, 14, 15, 6 plus 4. How many members were present? 19, which is more than 17. So quorum is achieved. What is the total weighted votes? Central government will be 1/3 and state government will be 2/3. So 1/3 plus 1/3, 17 into 2/3, 17 2s are 34, 34, 35, 36, 36 divided by 3, that is 12. 12 is the total weighted votes. How much is the votes in favor, weighted votes in favor? 1 into 1/3, 1 into 1/3, 4 into 2/3. So 4 2s are 8, 9, 10. 10 divided by 3, that is 3.33. 3.33 divided by 12 is just 27%. So therefore the proposal will be dropped, because what is the percentage that we need? Greater than. You understood how the decisions will take place? Now tomorrow, if anyone is telling we did not do anything, it is the Union Finance Minister. You understood now what we need to ask? Got it? So it is not just the Union Finance Minister. I am not telling that Union Finance Minister is so good that she did not do anything. No, no, no. Union Finance Ministers and State Finance Ministers, everyone is equally responsible. Literally they are playing football, okay? So just the blame game. So here they will blame them and they will blame the center, okay? But speaking, reality is that the states is having more power, okay? What are the areas of recommendations by GST Council? Say this: taxes, cess, surcharge, all these are subsumed into GST. What are the taxes to be subsumed in GST? That decision they will take. Granting exemptions from time to time and fixing the threshold limit for the states. So we have different threshold limit for registration now. You know that. So for goods, if you are engaged in supply of goods, what is the applicable threshold limit? 40 lakhs. That too if you are in other than some states, 40 lakhs. If you are engaged in services, 20 lakhs. And if you are in special category states like Manipur, Mizoram, Tripura, Nagaland, 10 lakhs. So who will take the decision as to which state what limit should be fixed? Again GST Council. Model GST law and principles of levy, apportionment of GST. We discussed. IGST 50% will go to the consuming state, etc. That discussion also will be done in GST Council. Then rates of GST. Then special provisions to some states. Total 11 special category states are there as per the constitution. You remember it like this: MMTN, then ASAM, HUJ. First MMTN, Manipur, Mizoram, Tripura, Nagaland. Then ASAM, A for Assam, S for Sikkim, another A is Arunachal Pradesh, M is Meghalaya. Then HUJ, H for Himachal Pradesh, U Uttarakhand, and J Jammu and Kashmir. For these 11 special category states, the decisions, certain reliefs, etc. and all, the decisions will be taken by GST Council and any other issues relating to GST. Then look into next one, GST network. Listen, so compared to the earlier indirect tax system, in GST, what has happened? We have a system of matching of credits. What is the system of matching of credits? Please listen. Say you are one trader, ABC and Co. You are a trader. You are making purchases from 4 suppliers: Mr. X, Mr. Y, Mr. Z and Mr. P. And whenever you make the purchases, they will be giving invoice to you. Say 1 lakh plus 18% GST, 50,000 plus, so what is it? 18% GST means 18,000, then 50,000 plus 9,000, then 2 lakh plus 36,000 and 1 lakh 50 plus 27,000, like that they have given invoices. In your books, your ABC and company are in your books, what is the ITC? What is the ITC as per your books? 18 plus 9 plus 36 plus 27, that is 90,000. 90,000. Now what happened? So this Mr. X filed GSTR1. So what is GSTR1? GSTR1 is a return that contains the details of outward supplies. So Mr. X filed GSTR1, and in that GSTR1 he reported properly 1 lakh plus 18,000. Mr. Y did not file GSTR1, no GSTR1. So they did not file the GSTR1. Mr. Z filed GSTR1, but in that GSTR1, 2 lakhs plus 18,000 is mentioned instead of 36,000. And Mr. P normally filed GSTR1 and they mentioned 1,50,000 plus 27,000. Now, based on the GSTR1 of the supplier, based on the GSTR1 of your supplier, one statement will be made available to you. What is that statement? GSTR 2B. Previously it was 2A, now it is 2B. 2A is also there. 2A is also there for reference purpose, but for availment of ITC, that is to take the credit, we have 2B. So what is the source for 2B? What is the source for 2B? GSTR1 of your supplier. And as per 2B, how much is the ITC? How much is the ITC as per 2B? 18,000 plus 18,000 plus 27,000. So 63,000. So ITC in GSTR 2B is 63,000. Why there is a mismatch between ITC as per your books and ITC as per GSTR 2B? Supplier did not file GSTR1 or supplier reported wrong information in GSTR1, correct? So because of which you will not get that in 2B. How much you can take as ITC? 90,000 or 63,000? Only 63,000 can be availed as ITC. What about the remaining amount? What about the remaining amount? Can you take or you cannot take? You cannot take, never. We can. When? Whenever Mr. Y files GSTR1. So now we need to ask Mr. Y, boss, you have to file GSTR1 and you have not filed. I will not get the credit. Please give your login details. I'll ask my bonded labor. So to log in and file, correct? So you did that only last 2 years. Next, second, Mr. Z, we will ask him and we will tell, you know, there is one Shankar Netralaya, like that one place is there. If you have eyesight, you go there, because I paid 36,000, idiot, you filed only 18,000, and therefore remaining 18,000 whose father will give? So like that you will ask him politely, and they will rectify their GSTR1. After they rectify GSTR1, again it will be reflected in our 2B whenever they rectify it. Whenever supplier files GSTR1, whenever supplier rectifies GSTR1, at the time it will be reflected in 2B and we can take the ITC. You got it? So literally only matched ITC can be taken. Then you can understand here there is a need of a proper system in place, because every invoice of ours needs to be cross verified with the supplier whether they are going to file GSTR1 or not. So for this a sophisticated system is required. For that purpose they created GST network. GST network is a special purpose vehicle, an entity that has been set up to provide shared information technology infrastructure and services. And whom they will connect? Central government, state government, taxpayers, banks, everyone will be connected here. And that can be accessed. How the GST network can be accessed? Through the common portal gst.gov.in. What functions they will do? You tell me. You would have done lot of interaction in the GST portal na, in your articleship. What activities can be done? First filing returns, registration and all you will not do. First registration, thereafter filing of returns, thereafter payment of taxes. If you have paid excess, refund, okay. And next, matching will happen, am I right? So matching of credits and sometimes matching of tax payments. we have to make the payment, e-payments. Then e-invoicing, have you heard of this? E-invoicing and MIS reports, they will generate MIS reports and will give. So these are the various, even computation and settlement of IGST. These are the functions of GST network. Of course, communication between the department and the taxpayer also will happen through GST network with respect to giving notices or any other department communication. That also you can write if you get a question. Okay. And GST network is government entity or a private entity? 100% government entity. 50% is owned by central government, remaining 50% is owned by all state governments together. So it is a government entity. Then we have Suvidha providers and application service providers. Basically what they do is that Suvidha Kendras. Suvidha Kendras are like facilitation centers. If you want to do the registration, filing returns, small taxpayers may not go to chartered accountants, etc., because they feel like chartered accountants are costly. That myth is there, okay, but they don't know that we file return even for 100 rupees, 200 rupees also, because it has become like a fish market now. And therefore, the Suvidha Kendras and application service providers are created. Then benefits of GST, none of this you will feel satisfied, but we have to read. Elimination of multiple taxes and double taxation. So multiple tax is not there, there is only single tax. CGST, SGST, UTGST, IGST, no, single tax, forget. But they are telling no, multiple taxes are not there, single tax only, okay. And there is no double taxation. But while computing GST, we need to add all indirect taxes other than GST, and we need to compute GST. While computing GST under customs, we have to add customs duty and then compute GST. We need to add entertainment tax and then compute GST, okay. But theoretically, it eliminates multiple taxes and there is no double taxation, okay. Creation of common market with common taxes and procedures. Common procedure, anywhere across the country the procedure is same, but only department will not agree, okay. Yes, because if you take a business which is having branches in multiple states, they have a Herculean task of satisfying the officers in different places. Tamil Nadu High Court decision, in Tamil Nadu they will agree, but in other state they are not agreeing. They are telling this is not Tamil Nadu. Madras High Court decision will not prevail here, we don't have any jurisdiction. For the sake of this, we need to go to Supreme Court and we need to get a decision from the Supreme Court. Do you think Supreme Court decision is that easy? Sir, n number of pending cases are there, sir, okay. So it is not one recent movie, one movie came, Karuppu, like that one movie. Just like that we cannot bring God and all to handle all those cases, okay. Hypothetical, God also will not work out, okay. Actually the first half is correct, okay. Even if God is coming also, he can't do anything. He will tell, okay, I will go and become statue. I cannot be into this system like that. That's the reality. And that many cases are there where we will get the ruling. But theoretically, creation of common market with common taxes and procedures. Then buoyancy to government revenue. This is true. Very good revenue, because drastically GST revenue has increased from the earlier indirect tax. Boost to Make in India initiative. I don't know how. Seriously, I don't know. And why? Because of GST. So, India has started GST. Come on, we will shift our base like that. Will manufacturers shift from China, Japan, etc., Taiwan and all to India or what? I really don't know how it will be Make in India initiative. And enable the goods and services to be globally competitive, okay. Eliminates cascading effect of taxes. This also not true to the full extent. It is not eliminating fully the cascading effect of taxes, to some extent only. Then this GST compensation cess, like that one concept is there. So you just write there, not applicable at present. Actually, GST compensation cess is rest in peace. So 31st March 2026, that is the end date for GST compensation cess. Then why you gave sir in the book? For your exam, all changes up to April will be applicable for November exam. They gave this in the study material, so for that reason I gave, but literally they will not ask any question, don't worry. I am discussing for next 5 minutes what is it about, for general knowledge purpose only. Okay, listen. GST compensation cess was introduced for the purpose of giving compensation to the states. Why compensation needs to be given to the states? Because of implementation of GST, the state's revenue, indirect tax revenue may fall. Why will indirect tax revenue of the states fall? Because previously it was origin based tax, now it is destination based tax, which means if you take Tamil Nadu, which is a manufacturing state, lot of goods are manufactured in Tamil Nadu, and not everything is consumed in Tamil Nadu, it will be consumed in the neighboring states, which means if you move from originating state tax to destination tax, means Tamil Nadu government is not going to get much revenue. So like this, some producing states may suffer because of implementation of GST. To compensate those states, they brought in GST compensation cess. Actually, GST compensation cess will be only for a period of 5 years. So 2017 onwards, 5 years already over. But because of COVID, which came out of syllabus, they extended it till 31st March 2026, and this GST compensation cess will be applicable on some notified goods, not only those states where the sale happens. For example, motor vehicle, if you sell a motor vehicle anywhere in the country, GST compensation cess used to be applicable. That revenue will be used for funding the state government whenever they suffer the loss because of implementation of GST. Got it? But this compensation cess, they have removed, and the effect got absorbed in the regular rate of GST itself. This no one will tell you. Okay, I'll discuss this with you. Listen. Previously, which car you like? Some car you tell na, Mahindra Thar, Thar. So 12 lakhs is the price of that car, and GST used to be 28%, and compensation cess actually 22%. Let's take 12%. So 22% if you are taking, how much it will come to? So 12 lakhs into 22%. GST compensation cess will be computed on the same 2 lakh 64,000. So what is the final price? 12 lakhs plus 3 lakh 36 plus 12, 2 lakh 64,000, that is 18 lakhs. So a 12 lakh worth car, you are paying 18 lakhs. Of course, on the top of that, we have registration charges, road tax, insurance, etc. and all. But before adding that, I am telling you, so 18 lakhs means a car which is worth 12 lakhs, you are paying 18 lakhs. 6 lakhs you are paying extra. Got it? So when you buy Mahindra Thar, Alto car is free. Okay. So how? 6 lakhs, one budget car rate they are collecting as tax. And this, lot of people raised their concern. Why should we pay this much? 50%, why should we pay? GST is 28%, compensation cess is 22%. Therefore, last year in July, so there is a GST rate revision has happened. Okay. So wherein they have praised Modi ji and Nirmala Sitharaman, full paper, Hindu, Times of India and all. This side Modi's photo, this side Nirmala Sitharaman's photo, and in the middle and all. So GST savings, some Hindi word, I don't know what is that, some nice word they were telling. Okay. So something here, some slogan and all they were telling. Okay. Like Aur Ek Bar Modi Sarkar, like that. You know, GST, the best GST benefit which we have given, etc. and all, as if they are concerned, you know, they have given. And people also, idiots here, they will not use their brain and they will not think anything, you know, for the sake of us only, central government is doing everything like that. See, I am not against any government, but this is a democracy. In democracy, we have every right to speak about the things which are happening to us, okay? And what they did, 50%, anyhow 31st March 2026, the rate is going to be 28%. Anyhow. Now, just before that, somewhere in July 2025, they are coming and telling, we are going to revise the rates to 40%. See, from 50% we saved to 40%. People clapped. Wow, super, like that. Okay. See how much tharkuris we are, that we are clapping for it. 40%. Anyhow, this 22% is bullshit. It will go in few months. But they changed it to 40, which is going to be forever. And we are the idiots of the highest order, where we praise the government for increasing the rates. You got it? Understood? And 28% should have been the rate anyhow, because compensations should not be there. And they changed it to 40% now. And previously the highest rate of GST was 28%, but now the highest rate of GST is 40%. On many things 40% is now applicable, not only motor vehicles. And they are telling, sir, no sir, they reduced the rates to 18%, sir. Which motor vehicle? Budgeted cars, which is of 1000 cc, etc. and all, Nissan Magnite, some cars which you will not even dream of buying. Okay, those cars, who need pa? Because those who are buying cars, car is a luxury. Those who are buying cars, definitely they will buy a luxury car only. Why will they go for budgeted car? Anyhow, petrol is going to be the same. So why will they go for budgeted car? They go for luxury car. Anyhow, luxury car, the rate of GST should be 28% only. But it has been changed to 40%. Now, what is the highest rate of GST? 40%. Not only here, even in case of this online money gaming, betting, etc. also, the rate of GST has been taken to 40%. On aerated beverages like colas, etc. also, they have taken it to 40%. There are many goods for which the rates have been increased also. But that information we will not see. Fine. This is about GST compensation cess. Clear? With this we completed, and we don't have to read other things and all, because GST compensation cess is not applicable. This is the end date of GST compensation cess, 31st March 2026. Now we are moving on to the next chapter. Actually, this is the starting point of the syllabus. Okay. So far what I discussed with you, all these are basics, not for exam purpose. This is just the appendix which is given in study material. As the students will transition from intermediate to final, you should be knowing, that's why they have given this, but not for exam purpose. Now we are going to learn something which is for exam purpose. Segment 2, we are going to learn supply under GST. Supply is the taxable event under GST. You all know that. So what is taxable event means? The event on happening of which the tax is levied is known as taxable event. So supply is the taxable event. Supply is defined under section 7 of CGST Act. In this chapter we are going to learn two sections, section 7 and section 8. But this is going to be a big chapter. Lot of time we will spend in this place, because this is the basis. If a transaction is not a supply, we don't have to pay GST. In exam, every time when you see a transaction, the first thing that you need to check, is it supply or not a supply? Because if it is not a supply, we don't have to bother about RCM, FCM, exemptions, etc. and all. So it is not a supply, simple, and consequently GST not payable. Are you getting this? So supply, section 7, and every chapter I have given the index. Chapter wise index also I gave, overall index I gave. In this chapter, what are the concepts we are going to cover, and it is in which page, like that I have given. In case if you want to refer, it will be easy for you to refer. And 7 and 8, these are the two sections. 7 deals with supply. 7 and 8 of which act? Yesterday we discussed the 7 and 8 of IGST Act. What is that 7 and 8 of IGST Act? interstate supply and intrastate supply. This 7 and 8 of CGS tax, that is supply, composite and mixed supply. Now look into section 7. There are few chapters like up to chapter number 10, this volume 1, where we are going to learn through bare act. Procedural part we are not going to learn through bare act. Okay, please try to listen to the approach. So first 10 chapters, supply to composition scheme, these are legal aspects. There is no procedures here. Everything is legality of GST. We have to learn the law as it is. That's why we will be reading the bare act and then we will learn from there. Thereafter, it is completely procedural, like registration, demand and recovery, offence and penalties, then appeals, advance ruling, assessment, returns. These are all procedural aspects. There I am not going to teach you bare act. There we need to learn like procedure, we will learn like procedure. We don't have to read, because if you read bare act also the same information only will be there. There is nothing to read between the lines over there. You got it? So only few places where we have this, we have to learn it this way. Please learn it this way only. Look into section 7. If you observe the bare act, this is a section reference from the act, copy paste. You can see total 4 subsections. Can you find there? Subsection 1 is supply includes. So inclusions in the supply is given in 7 subsection 1. Go to 7 subsection 2. Go to 7 subsection 2. Notwithstanding anything contained in subsection 1. Usually in the law, when they say notwithstanding anything, what does it mean? Non-obstance clause means it will override subsection 1. Subsection 2 will override subsection 1. Notwithstanding anything contained in subsection 1, activities or transactions specified in schedule 3 or such activities undertaken by central government, state government, local authority in which they are engaged as public authorities as may be notified by government shall be treated neither as supply of goods nor as supply of services, which means exclusions is given in 7 subsection 2. Exclusions is given in 7 subsection 2. Inclusions is given in 7 subsection 1 and exclusions is given in 7 subsection 2. So by reading 7.1 and 7.2, you know what are the activities which are treated as supply. Now see 7.1a. What is 7 subsection 1 capital A? Where certain activities or transactions constitute a supply in accordance with the provisions of subsection 1, they shall be treated either as supply of goods or supply of services. So subsection 1a talks about classification. Once an activity becomes supply, we will divide it into goods or services. So that will happen in 7.1a as per 7 subsection 1 capital A read with schedule 2. Why should we divide the supply into goods or service? Let it be goods or service, it is going to be the same GST only. Why should we classify? Very good, place of supply. The place of supply provisions will differ between goods and services. Next, rates. The rates will differ. Even very good. Threshold limit for registration also will change. Like that, there are difference in provisions. Like time of supply also different provisions for goods and services. Input tax rate also different provision for goods and services. So as there is a difference in provisions between goods and services, even RCM, even exemptions. So we need to classify the supply into goods or services. Got it? Now look into 7 subsection 3. 7 subsection 3. Tell me what is it 7 subsection 3 says. Subject to subsection 1, 1a and 2. Government may on the recommendations of the council specify by notification the transactions are to be treated as supply of goods and not services, supply of service and not supply of goods. That is reclassification. reclassification. Listen, you gave me cloth, I am a tailor and I am stitching a garment. You gave me cloth and I am stitching a garment. Okay. Is it supply of goods or supply of services? Definitely it is supply of services. Why it is supply of service? Because I am carrying out process on the goods belonging to other person. You are giving me goods, the substantial material is yours and I do the process. So it will come under supply of services. This is given in 7 subsection 1 capital A. Now, central government on the recommendations of council is having power to reclassify this as supply of goods. Actually it is service, but they have power to classify it as goods. Actually it will be goods, but they have power to classify it as service. But this power is not used, not used. So this is not effective at present. Not effective at present. So they did not give anything, but they have power. The power we should know. So when they will do like this, for service if it is lesser rate, for goods it is more rate, they will change. You understood? Next, you understood the arrangement of the sections pa? 7.1 is, 7.2 is, 7.2 exclusion, 7.1a classification. So these 3 only you need to remember. Let's start with inclusions. Look into inclusions, first one, 7.1a. All forms of supply of goods or services are both such as sale, transfer, barter, exchange, license, rental, lease or disposal. This we can easily remember with one mnemonic pa. DEBTS, debts RLL, debts RLL. D for disposal, D for disposal, E for exchange, B for barter, T for transfer, S for sale, R for rental, L for lease, another L for, okay. Now we will understand, try to understand what is the meaning of each and every term. What is sale? You know, transfer of property in goods from one person to another person for cash, for deferred payment or any other valuable consideration. Somewhere in foundation, in childhood you would have studied Sale of Goods Act. There we have sale definition, you know that. Then what is transfer? Difference between sale and transfer. Because in sale, sale itself is a transfer. Then what is transfer? Huh? Transfer is done without consideration. Without consideration, but here if you observe, made for a consideration, like that they are telling. Okay. So can you give me example of transfer that is made for a consideration? Very good, sir. You have capital gains. In that transfer, a number of words you studied: extinguishment, relinquishment, compulsory acquisition, correct? All these are not sale, but it will come under transfer. Example, you have a house property, you don't have the intention to sell it, but because of a metro project or road widening project, the compulsory acquisition will happen, correct? Transfer otherwise than in pursuance of contract. For example, you made a damages, okay. So say for example, those who are sitting in the first row, so carefully you need to see the camera and go. Suppose if you hit that camera and that camera goes and falls somewhere over there, and if it is broken, Sony camera it is, Sony Alpha, 1,40,000 rupees camera that is. Now what will I do? I don't know, you are my student or not, that is different story. First pay money, correct? Even though you don't have intention to buy, I don't have intention to sell, but the sale happens, correct? This is called as transfer. Then extinguishment, relinquishment, usually in case of insurance claims, what will happen? The remaining parts or the salvage will go to the insurance company and we receive some amount. So all these will come under transfer, sale versus transfer. Understood? Next, barter, exchange of what? Exchange of goods for goods, or goods for services, or services for goods, or services for services. For example, I am giving you 100 bags of rice, and in return you are giving me 50 bags of wheat. Okay, exchange of goods for goods, or exchange of goods for services. I will be taking classes for you, have to give me 100 liters of petrol. So that, that will be called as exchange of services for goods. Exchange of services for services. For example, landowner will be giving the development right under joint development agreement, JDA. Under joint development agreement, what landowner will do? They will give the development right to the builder, and for which the builder will give the flats, correct, constructed flats. So therefore it is a case of service for service. I am giving the land development right and you are giving me the flats. So therefore it is services for services, like that. It is barter. What is exchange then? Barter is a exchange. Then what is exchange? Because that word is also there. Usually when you want to buy a product, you will give your old product and some cash and you will get example, purchase of new TV in exchange of old TV, and you pay some 25,000 or 30,000. That is an example of exchange. Next, license. License usually for intangibles. Intangibles, and we are not transferring it, we are giving the right to use. Example, copyrights, trademark, patent, etc. We get the license fee. Okay. Next, rental. Normal. You have either mobile property or immobile property. You are not transferring it, but you are giving right to use, for which you receive some money, that is rental. Then what is the difference between rental and lease? Term. If it is long term, we call it as lease. If it is short term, we call it as rental. Usually 11 months or like somewhere like 1.5 years, 2 years, we call it as rental. If it is 10 years, 20 years, 50 years, 60 years, we call it as lease. The term differs. Okay. Disposal, that is also sale, but you will not attach much economic value for it. For example, sale of scrap, sale of old and used assets, like that. That will be called as disposal. Okay. Whether these activities are only treated as supply? These activities we discussed now so far. Debts RLL. What is the debts RLL? D for disposal, E for exchange, B for barter, T for transfer, S for sale, R for rental, L for lease, L for license. Whether these activities are only treated as supply or not? No, because it has got a prefix. What is that prefix? Such as. Such as means for example. It's a illustrative list. Such as means for example, illustrative list. So not only these activities, but other activities also will become supply. Then why they gave? So they gave it for the purpose of a reference. A reference needs to be given. For the reference purpose, they gave this list of activities. Okay. So made or agreed to be made for a consideration. So what is the first and foremost important condition in order to constitute supply under 7.1a? It should be for a consideration by a person in the course or furtherance of business. So two important conditions. First, it should be for a consideration. Second, it should be in the course or furtherance of business. If these two are satisfied, then any activity will become supply. Now I am taking class. Is it an activity? For consideration, in the course or furtherance of my business, therefore it will become supply under 7.1a. You are listening to the class. Is it an activity? Yes. For consideration, what? What? What are you getting as consideration? Don't tell knowledge, talent. No. Consideration should be, something received or receivable. Okay, in kind or in money. So, intangibles, etc. you cannot say. Got it? So, therefore, you are not getting any consideration. You are paying consideration actually. You are not getting consideration. So, that is not a supply. Got it? Say you are selling your old mobile in OLX. Is it supply under 7.1a? What is the activity? Sale. For consideration? Yes. In the course or furtherance of business? Why? You are not a second hand mobile dealer. So, it is not in the course or furtherance of business. Therefore, is it supply or not a supply? Not a supply. Is it clear? Even though consideration is there, but it should be in the course or furtherance of business. Is it clear? And suppose if it is in the course or furtherance of business, but there is no consideration. For example, I am taking classes in YouTube, revision batch, etc. in YouTube, and I am not getting any money out of it. Okay. Now, is it activity? Yes. Course or furtherance of business? Yes. But for a consideration? No. So, consequently, it is not a supply. For example, if I am getting ad revenue, suppose if I am enabling ads and if I am getting ad revenue, will it become supply? Yes, because consideration is there. And should I pay GST on that? Yes. So, first when we are discussing supply chapter, don't bother about whether it is taxable or exempted, etc. and all. Let's focus on, is it supply or not a supply? Okay. Next, you understood 7.1a? Tell me in simple words, how do you need to remember? Activity, consideration, course or furtherance of business. Okay. 7.1a, I want you to read it once. Read it once and tell me what are the differences you have between 7.1a and AA. Yes. Tell me. You did not understand anything, na? You were reading. See, there is a person other than individual. Who is a person other than individual? Huh? One big list is there, pa. Firm, AOP, BOI, LLP, company, body corporate, cooperative society, local authority, artificial juridical person. They are all called as person other than individual. Okay. Person other than individual and its members. So, you take firm, person other than individual, firm. For the members of the firm, partners. You take person other than individual, company. For the members, shareholders. Are you understanding? Between them, if there is any activity for a consideration, then it will become supply. They cannot take a stand that, that is not a separately incorporated person. For example, you take an association. Association is having a separate legal entity or not having a separate legal entity? But you studied foundation, intermediate and you came for final only, no? Correct? Company is having a separate legal entity, that you know? Super. Like that, whether association is having a separate legal entity? No. If all the shareholders die also, the company will continue. You studied, like that, if all the members of association die, will the association continue? Which means association is not different from members. Members and association are one and the same. Agreed? But if the association provides services to members and they receive maintenance charges, they have to pay GST on that. You know that? Housing association is there. Common expenses they will incur, and they will recover maintenance charges. Actually, all the flat owners, if they leave the association will not be in existence. But even then, they are treated as two separate persons, and between them, if there is any consideration, definitely it will become supply. That is the impact of this. A partnership firm paying money to the partners, whether partners receiving money is supply or not a supply? Supply under 7(1) AA, unless otherwise it is withdrawal of profit. Okay, unless otherwise it is withdrawal of profit. This is a burning issue. Please focus. Lot of partnership firms are there, and even your articleship firm is also a partnership firm, where your principal is a partner in that firm. What is the kind of remuneration that they will be receiving from the firm? If it is salary or any other remuneration for being a partner, that will be withdrawal of profit, and it is return on investment. That will not be subject to GST. It is not a supply. However, if they make a separate agreement with the partnership firm, or in the deed it has been mentioned that apart from being a partner, they will be rendering the services to the firm for which they are eligible for this money, like that, that will be subject to GST. Okay. Now, one more example I will give you. Say, I am having 10 lakhs. You are having 10 lakhs. What is your name, sir? Shyam. Shyam is having 10 lakhs. Now, 20 lakhs, we both started one coaching center. Okay, wow. Clear? Shyam is non-teaching person. I am teacher. But we both will look after the business. Okay. So, as we invested 10 lakhs, we will be taking monthly 50,000 as the salary. This 50,000 is what? Withdrawal of profit. Supply or not a supply? Not a supply, because usually withdrawal of profit is not a supply. It is return on your investment. That is not a supply. Now, in addition to this, I am taking classes. Then I should get a faculty remuneration. Yes or no? Whether that faculty remuneration taken from the firm, because if not me, some other person should be appointed as a faculty and they need to get the remuneration, yes or no? Therefore, I am taking that faculty remuneration. Will that become supply under 7(1) AA? Yes. That will become supply under 7(1) AA. Person other than individual, partnership firm, and the member between us. If there is any activity for a consideration, it will become supply. Is it clear, pa? The activities or transactions by person other than individual to its members or constituents, or vice versa, both. Either firm to partners or partners to firm, company to shareholders or shareholders to company. Sir, between company and shareholders, what activity will be there, sir? Have you heard of share transfer fees? Have you heard of this word, share transfer fees? For example, you are having shares of a company and you want to transfer that shares, not through stock exchange, to your relative or to your wife or to any other person you wanted to transfer. Now you cannot go to the stock market, you need to go to the company and request for share transfer. The company will transfer from your name to, to whomsoever, transferee's name, for which they will collect a transfer fee, share transfer fee. It is between company and the shareholder, person other than individual and its members. You got it? So, what is the point that is missing here between A and AA? Course are furtherance of business, but according to me, that is inbuilt into this, because for a person other than individual, how there will be personal? Personal is only for individuals. For a person other than individual, for company, what is called as not in the course or furtherance of business, everything is business only. For partnership, everything is business only. There is no human relationship there. Are you getting this? So everything will be business. When it comes to individuals only, we will have personal business. But when it comes to all other forms of organization, that is partnership firm, company, local authority, trust, etc. Everything will be business. You got it? So that in the course or furtherance of business is inbuilt into this. Then what is the purpose of this explanation? I'll tell you. 2018, one Supreme Court decision came. That Supreme Court decision was given in the context of service tax. In service tax, there was a issue. The same issue with which I started this concept. There is a housing society or a housing association which is collecting maintenance charges from its members. Should they pay service tax on the maintenance charges was the issue, for which there were a lot of litigations during service tax, and it went up to Supreme Court. The Supreme Court decision came in 2018 stating that service tax should not be collected. You understood? Association should not collect service tax from the members on the maintenance charges, like that one decision came in the year 2018. But 2017 onwards, GST started. Many people interpreted that this Supreme Court decision will be applicable even for GST. Now government want to block. No, for GST it should not be applicable. Got it? So they added this explanation. Now you read, you will understand. For the purpose of this class, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force or any, understood? Any judgment, decree or order of any court, tribunal or authority, the person and its members or constituents shall be deemed to be two separate persons. Always between government and judiciary, Tom and Jerry will happen, pa. Seriously. So judiciary will give a decision, and what government will do will overrule the decision by making a amendment, retrospective amendment and all they will do. Like that, here judiciary gave it in the context of service tax. Actually speaking, that should be applicable for GST. Now that got overruled through this notwithstanding clause that is added in the section. Okay. So therefore, person and its members shall be deemed to be two separate persons, and the supply of activities or transactions inter se. Inter se means between them. Inter se means between them shall be deemed to take place from one such person to another. Next. You understood 7.1a and AA? Look into 7.1b. Which subscription charges? Club, yes, for club or any other association or any other body, whatever membership fees that you pay, whatever subscription charges that you pay, all this will now come under 7.1AA. Okay. Of course, we have some exemptions. We have. For maintenance charges, we have an exemption, 7,500 rupees per month. They are not required to pay GST. For other club, any other association, 1,000 rupees per annum, like that we have exemption. Okay. But again, I am telling you, when we are discussing supply, don't get confused about taxability. We have exemptions, and on the top of that only it will be taxable. Okay. Next. Please read 7.1a versus 7.1b. 7.1a versus 7.1b. What's the difference? 7.1a is any activity, 7.1b is only import of services. Why import of goods is not given? Because it is a subject matter of customs. Okay. And what is another difference you can find? 7.1a in the course or furtherance of business, but 7.1b may or may not be, whether or not in the course or furtherance of business. For example, you are subscribing for Amazon Prime or Netflix for a consideration, correct? You have subscription. Now, is it import of services? Yes, because Amazon Prime or Netflix is a person outside India, you are in India, so it's an import of service. Is it for consideration? Yes. Is it in the course or furtherance of your business? No, it's your personal. even then it will become supply. Okay, you take my case. I am paying monthly 6,000 rupees to Google Drive for the purpose of getting some 4 TB of Google Drive space. So this money what I paid is import of services. Yes, Google is outside India, it's import of service. For a consideration, yes. In the course or furtherance of my business, yes. Therefore it will become supply. So whether or not in the course or furtherance of business, it will become supply. Why such a disparity? In the 7(1)(a) case, they did not tell that even though it is personal, it is supply, like that they did not tell. But why in this case they are telling? What is the reason behind it? Simple reason. Whenever you import service, what will happen to the foreign exchange? Inflow or outflow? They want to tax it. Simple. You got it? When you are importing services, there is a foreign exchange outflow, and Indian government don't want the foreign exchange outflow. You see the alternative services and try to receive it here itself. Why are you receiving it from outside India? If you are receiving it from outside India, even though it is for personal purpose, be ready to make the payment of GST. They want to make it costlier. Okay, for that purpose it is brought into supply. Is that clear? Then why they gave, whether or not in the course or furtherance of business, they could have given not in the course or furtherance of business. Why that whether or not? Because if it is in the course of business, 7(1)(a) itself will take care na. Why separately in 7(1)(b) they need to give? Because 7(1)(a) is from supplier point of view, whereas 7(1)(b) is from recipient point of view. When we interpreted Netflix and Amazon, whether in the course or furtherance of business, from whose side you have seen? Supplier side or recipient side? Recipient side. So that's what point of view will change. 7(1)(a) is from supplier point of view and 7(1)(b) is from recipient point of view. Is that clear? Next, 7(1)(c). 7(1)(c), activities specified in schedule 1. There are some activities specified in schedule 1 made or agreed to be made without a consideration. So there are certain activities even without consideration it constitutes supply. This is actually exception to 7(1)(a). Agreed? Because 7(1)(a) says for consideration, but here they are telling without consideration. What are those activities? It is given in schedule 1. Please look into the next page. Same page. Same page. Activities to be treated as supply even if made without consideration. In that, look into the first one. Permanent transfer or disposal of business asset where ITC has been availed on such assets. Listen, I am buying a AC and at the time of purchase of AC, GST paid is taken as ITC. What will I do with the AC after 3 years, 4 years? Because life is hardly 3 years, 4 years. Thereafter, it may not function as effective. So what should I do? I can sell it or I can gift it to someone else. Correct? So I donated it to an orphanage. For a classroom, this AC may not be effective, but for an orphanage, which is a small room, this AC may be effective. So therefore, I am gifting it to an orphanage. For consideration or without consideration? Without consideration, correct? So even though it is without consideration, it will become supply. That's what they are telling. Disposal of business asset. What is a business asset? AC, on which ITC is availed. What is the intention behind taxing this, or what is the intention behind bringing it into supply? Please concentrate. First, I enjoyed ITC. I enjoyed ITC. Is the asset with me? Is the asset with me now? No, the asset is with some other person. When the asset is with some other person, how can I enjoy ITC? Are you understanding? Clear? Sir, why disposal of business asset? They wanted to tax it. Why they have brought it under supply? Simple logic, sir. When the asset is not with me, I should not enjoy the ITC related to such asset. The asset I am gifting to someone. So therefore, ITC I should not enjoy. So they are telling you treat it as supply. Then how to pay GST? In intermediate, you would have studied this. Section 18 subsection 6. Section 18 subsection 6 says whenever you are selling a capital goods on which ITC is availed, the GST payable will be highest of the following. A. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value of that particular capital asset, whichever is higher. Okay. Now listen. I am buying an AC, say on 10/5/2022, I purchased an air conditioner. For rupees 40,000 plus GST. So it is 18% of 40,000, 7,200. So 40,000 into 18%, that is 7,200 rupees. I purchased an air conditioner and I used it for some time and I disposed it off. Say on 25th of February 2024, 25th February 2024, gifted to old age home. Gifted to old age home. Is it supply or not a supply? And the 7,200 ITC availed pa. ITC availed. Is it supply or not a supply? Supply under section 71C. 71C read with schedule 1. Every time when you refer to 71C, you have to write read with schedule 1. How much will be the GST payable? GST payable under section 18(6). What is that? A. ITC availed. How much is the ITC availed? ITC availed minus 5% for every quarter or part thereof. Every quarter or part thereof. What is the ITC availed pa? 7,200 minus how many quarters? Part thereof also. You need to take calendar quarter. So May 2022 means you count April, May, June. So 1. Then in 2022, 3 quarters, correct? April, May, June, July, August, September, October, November, December. So in 2022, we have 3 quarters. In 2023, 4 quarters. In 2024, 1 quarter, Jan, Feb, March, part thereof. So total 8 quarters. So 5% into 8 quarters. 5% for every quarter or part thereof. So how much it will come to? 5 8s are 40. So 7,200 minus 40%, that is 4,320. You understood? 5% pa, 5 8s are 40. So 7,200 minus 40%. So 4,320. Or B, GST on sale value, that is 0. We are not selling, right? Whichever is higher. Which is higher? Whichever is higher, that is 4,320. Logic simple. As the asset is not with you, they don't want you to enjoy the full ITC. Proportionate ITC you can enjoy, but they want you to pay this. But if they ask you directly to pay, you will ask them, why should I pay? So they created it as supply. As they created it as supply means taxable event occurred, so you need to make the payment. Is it clear? Okay, this is the purpose behind 71C first point pa. Okay va? Can I proceed? Look into second. First one is permanent transfer or disposal of business asset where ITC has been availed on such assets. Second, supply of goods or service are both between related persons or between distinct persons. So we need to understand who are related and who are distinct. So between related and distinct, if there is any supply when made in the course or furtherance of business. Now listen, what is the objective behind bringing this point? Between related persons, even if there is no consideration, but indirectly there will be consideration in the form of profit share. Sir, I am a holding company, you are my subsidiary company, and we both are related. Any profit that you earn, say I am holding 55%, means 55% is mine, correct? So now I am giving you a product or I am giving you a service, but I am not charging any consideration. When I am not charging any consideration, really I am not getting any consideration? No, there is a hidden consideration. What is that hidden consideration? Even if I am not charging anything to you, I know that whatever profit that you generate, 55% is mine. So therefore you cannot, but if you say profit is consideration, then conceptually it is a mistake. You cannot say profit as consideration. You understood? So they are telling between related parties, even though without consideration, it constitutes supply. Understood? But don't expect me to give the reasoning for every provision like this. To the extent possible, wherever I have understood and I have learnt, I will share with you. Okay. The advantage of remembering the logic behind a provision is that you will never forget the provision for that reason. Okay. Otherwise, you don't know what it is, why it is, and you will be remembering like abstract. Okay. So for that reason, I am just giving you the logic behind it. Done? So between related parties or between distinct persons, any goods or services, even though without consideration, constitute supply, but it should be in the course or furtherance of business. Why they brought in that in the course or furtherance of business? Otherwise, between relatives, personal transactions and all should not get taxed. Nah. First point, by default, they are telling business asset. Correct? Second point, if they say between related parties, all transactions, even though without consideration, constitute supply, which means that for me, my wife is related. Amapa. Come on. Wife is related only. You are looking as if, no, I said something wrong. Wife is related only, pa. As per definition, family will come under related. Okay. So my wife is related. And suppose if she does something to me or I did something to her, if it becomes supply and if government is coming and asking to pay GST, it is too much, na? Correct? That's why personal transactions they don't want to touch. They have added in the course or furtherance of business. You got it? Next. Provided that gifts not exceeding 50,000 in value in a financial year by an employer to an employee shall not be treated as supply of goods or service or both. Employer and employee are treated as related. Employer and employee are treated as related. Employer will be giving gift to the employee. Of course, in the course or furtherance of business. Personal, we are not touching. Okay. Personal, we are not touching. So, personal means you don't take your mind to some other place. I am talking about normal personal, like marriage, some gift will be given by employer like that kind of sort. Okay. Nothing else. So, but we are not touching that aspect because clearly it is given, it should be in the course or furtherance of business. So, employer giving gift to the employee in the course or furtherance of business. Can you give me one example? Gift, sir, gift. They can give either in the form of goods or in the form of service. Anyway, they can give, correct or not? So, usually laptop they will give. As soon as you join and all, one laptop they will give for you only. And they will be giving one kit. In that one flask, one dairy, one pen and all will be there. That people will take photo and post in LinkedIn. Just to create evidence that they joined in that company, otherwise no one will believe, correct or not. So, all these gifts and during Diwali and all, a number of gifts. See, don't think about your principal. They will not give one chocolate also for you. But the moment you go into corporate, they will give. Okay. So lot of gifts. You won't get surprised that yes, like last year, one company in ECR, one software company, they have gifted cars to their employees. Car. Okay. That car was some 12 lakhs, 15 lakhs car, worth of car they have gifted. And one another company, 5 BMWs, they have gifted it to their employees. Okay. People will gift. That like kind of gifts also will be there. Now, this gift which is given by employer to employee, is it a related party transaction? Yes. Is it in the course or furtherance of business? Yes. If this proviso is not there, that gift will become supply and it will be chargeable to GST. Then no employer will give gift to the employee, correct or not? So some relief needs to be created. So a proviso is created. What is that? Up to 50,000. All employees together? No. Per employee. Is it for 1 year? Yes. 1 financial year. If it does not exceed 50,000, it is not a supply. Even though it is without consideration, even though it is between related parties, but it is not a supply. If it is a gift by employer to employee, where the value of gift does not exceed. What if the value of gift exceeds 50,000? Say for example, employer gifts an iPhone to the employee which is 1 lakh rupees. Supply or not a supply? Supply. Suppose employer gifts one Redmi mobile to employee which is 20,000 rupees. You understood? If it exceeds 50, entirely it will become supply, not the excess will become supply. You understood? Means in that 1 lakh example, it is supply. What is the value of supply? Entire 1 lakh or extra 50,000? Entire 1 lakh. Entire 1 lakh will become supply. Is that clear? Next. But here the words used is gift, not perquisite. What if it is a perquisite? It forms part of salary. As it forms part of salary, salary is excluded from supply and not subject to GST. So there won't be any issue, it will not be attracted. Okay. Then how to distinguish between perquisite and gift? How to distinguish between perquisite and gift? What could be the criteria? Very good. Offer document. Refer to the offer document. If it is specified in the offer document, it will fall under perquisite. If it is not mentioned in the offer document, it will fall under gift. Okay. Then sir, every employer can cheat the government by adding that gift in the offer document, because offer document is stamp paper. No, it is one letterhead of the employer, correct? Whose signature will be there? Employer signature, employee signature. That's what, HR signature and employee signature. When employee is getting a gift, won't he sign? Possible. Employer also can sign with a backdated letterhead, correct or not? Possible or not possible? Possible. So therefore, that is a loophole which is there. You got it? They can convert the gift to the perquisite. During audit, you will identify. For example, iPhone 17 Pro Max, when he joined 5 years before, how iPhone 17 Pro Max will be there? You got it? Like that, during audit, you will identify and tell them like this and all mistakes you should not do, rectify. You will not report. Okay. Because if you report next year, you will not get the audit now. So therefore, you will not report, you will teach them not to do mistake like that, do mistake in a different way so that no one will identify that. Got it? So, but this is a loophole which is there, and even government knows this loophole, but they were unable to break this. But lot of people who are giving gifts and all, they mention it in the offer document and they show it under perquisite, and they will put the income tax burden on the employee itself, because let the employee pay income tax. Why we should pay GST on that? Let the employee pay income tax on this. Got it? But if it is a high value gifts, no, it is better to treat it as gift itself. I'll tell you why. Say one car is given to the employee. If car is given to the employee, if it becomes supply, please listen, if it as a gift, if it becomes supply, they can take ITC, even though it's a blocked credit. Car is a blocked credit, but we have one exception. If it is covered under further supply, they can take ITC. Suppose if they are showing it as perquisite, they cannot take ITC, it's a block credit. Are you understanding this? So it's a block credit, they cannot take ITC, so they have to treat it as supply and pay GST so that they can enjoy the ITC with respect to that, which means it will be nullified. How it will be nullified? On this side liability, on this side ITC, same amount, so that they don't have any additional burden. Suppose if they are showing it as perquisite, definitely they will end up losing that ITC because it's a blocked credit. Got it? Next, look into third point. Supply of goods by a principal to his agent, where agent undertakes to supply such goods on behalf of the principal. Okay, so what is this? Supply of goods by principal to his agent or agent to his principal. What is the connection between these two? Principal agent transactions. Okay, either the agent could be a buying agent or the agent could be a selling agent. Suppose if you are a selling agent, I am the principal, what will I do? I send the goods to you and you make the sale. After you make the sale, you will be remitting the proceeds to me and you will take the commission, correct or not? Same way, if you are a buying agent, you will buy on behalf of me and you will recover whatever expenses or commission that you have incurred. So you may be a buying agent or you may be a selling agent. Literally, when you sell or you buy, you are doing it on behalf of me, correct? Yes or no? Then why it should become supply between me and you? For example, sale, okay, but goods sent on consignment is not sale na. Sir, sale I will pay GST, sir, but goods sent on consignment, is it sale or not a sale? Not a sale. In accounting, what we have done, goods sent on consignment, will show it as closing stock, correct? Unless the sale really happens, we will not consider that as sale. Instead of the goods being in our godown, we are sending it to the agent's godown. Then why we need to treat it as sale and why they are asking us to pay GST on that? What is the reason behind it? There is a big reason behind it. Listen. You don't have to make note, just listen. Earlier, that is before 1/7/2017, I am talking about before 1/7/2017. So when there is a principal, okay, who is located in say Maharashtra and the buyers are located in Tamil Nadu. When the sale takes place from the principal to the buyer, it will be subject to CST, Central Sales Tax. Central Sales Tax. They don't want to pay Central Sales Tax. So they created a agency model. Agent in Tamil Nadu. Principal to agent, no CST, because principal agent transactions, stock transfers, branch transfers were not subject to Central Sales Tax. To avoid that Central Sales Tax, they created the agency model. Then again, agent who is making sale to the buyer up to 10 lakhs turnover, no VAT. Up to 10 lakhs turnover, there is no value added tax. Got it? Now agent number 1. Agent 2, they will appoint another agent. Okay. Then agent 3, 30 lakhs escaped. You understood? Clear up? And agent 4, 40 lakhs has escaped. First for one state, one agent. Then one district, one agent. Then one town, one agent. Like that, the agency model has spread so rapidly that whenever they are sending the goods to the agent, no central sales tax. Again, up to 10 lakhs, there won't be any value added tax. So completely it has escaped the tax system. Got it? Now they wanted to tax these kind of transactions. First change what they made is that, every agent is compulsorily required to get registered. Compulsory registration, and there is no threshold limit. Now we have 20 lakhs, 40 lakhs threshold limit, but that is not applicable to an agent. Is it clear? So every agent is, come on, compulsorily required to get registered. Every agent is compulsorily required to get registered. Why? Because they don't want this 10 lakhs benefit or 20 lakhs benefit to be enjoyed by them, and they want to tax this. Got it? Now what principle started doing? So no CST. Even though they are compulsorily registered, but they want to track from where the goods started. See, these people are compulsorily registered, but what if they suppress the transaction? So they wanted to know from where the transaction has started, rooted back. So principal to agent, now they wanted to make it a supply under section 7(1)(c). So principal will pay GST, naturally he will recover it from the agent, and the agent will take the ITC, so that the chain is established. Is it clear? Understood? That's why they brought in principal agent transaction into supply. That is the third point. Clear? Then look into fourth point. Read fourth point versus 7(1)(b). 7(1)(c) fourth point versus 7(1)(b). You read and tell me what is the difference you can find. Huh? Consideration? 7(1)(c) there is no consideration. Next. Related party. 7(1)(b) is import of service from any person, but 7(1)(c) is import of service from a related person. 7(1)(b) is for consideration, 7(1)(c) is without consideration. 7(1)(b) is whether or not in the course or furtherance of business, but 7(1)(c) should be in the course or furtherance of business. Okay. So why again this related party transaction? For that reason only. Domestic related party transactions are captured in second point, but outside India to India related party transactions needs to be captured. If it is goods, anyhow covered under customs. If it is services, they wanted to keep it here, but the purpose is same. Related parties, between related parties, even if there is no consideration, but there will be a profit share. For that reason they wanted to tax these transactions. Got it? You can remember these four transactions easily through a mnemonic DRIP. D-R-I-P. D for disposal of business asset on which ITC is available. R for related party transaction including transaction between distinct persons. I for import of services from a related person or another establishment located outside India. P for principal agent transactions. So we completed inclusions in the meaning of supply. 7(1)(a), 7(1)(aa), 7(1)(b) and 7(1)(c). Whenever we are referring to 7(1)(c), we need to write read with schedule 1. Okay. And related to this, so I'll just give you a comparative table. You don't have to make note of this, or if you want you can do, it's up to you. Anyhow, this summary is there in the That's It book. Okay. Don't write too much in your notebook because already lot of resources are there. Again, you also don't increase writing in your notebook. Suppose if you want to make running notes etc., you can do that, but I'm just telling you. First, activity, consideration, consideration, course or furtherance of business, and from whose point of view we need to check, and what is the coverage. Okay. What is the first one that we saw? 7.1a. 7.1a. What is 7.1a activity? Any activity, correct? Section 7.1a, any activity in the nature of debts, RLL, disposal, exchange, barter, transfer, sale, rental, lease, license. Consideration, course or furtherance of business, point of view, coverage. What coverage? Goods are, services are, both goods and services are, both goods and services. Next, section 7.1a. Activity between person other than individual and its members. Consideration, yes. Course or furtherance of business, point of view, same. Goods and services, both. Okay, goods and services, because they use the word any transaction or activity, so it can be goods or services. Even though course or furtherance of business is not specifically mentioned, I told you it is inbuilt. Next, 7.1b. 7.1b. What is 7.1b? Import of services. Import of services, what is your answer? For consideration, and course or furtherance of business, may or may not be. So it may or may not be. Whose point of view? Very good. Recipient point of view. What is the coverage? Services. Only services are covered. Then 7.1c, read with schedule 1. We have D point, disposal of business asset on which ITC availed. Consideration, no. Course or furtherance of business, may or may not be. Very good, pa. See, disposal of business asset is what they are telling. To whom or for what purpose is not given. I gave you an example of donating it to a old age home. That is not a business purpose. I can give it to my employee. That is business purpose. You got it. I can gift it to my employee or donate it to my employee. That is for business purpose, employee welfare. So nowhere it is given that the disposal of business asset should be for what purpose. It should be business asset and you disposed of. That's it. For what purpose is irrelevant. You got it. And from whose point of view? Supplier. And the coverage is only goods. Business asset is only goods. Then R, related party transaction. Consideration, course or furtherance of business, yes. Point of view, supplier. Coverage, goods and services. Please check your book and answer. We are trying to create this comparative table because so that whenever you see a transaction, you will know whether it is a supply or not a supply. Okay, for that purpose. Then I, import of services from a related person. Consideration, course or furtherance of business. Point of view, always import of service should be from recipient point of view. Coverage, only services. Then P, principal agent transaction. Consideration, course or furtherance of business. Yes. And whose point of view? Supplier point of view. But sir, nowhere it is given principal agent transaction should be in the course or furtherance of business. Check the Bare Act. Check the Bare Act. It is said that principal to agent and agent to principal. Correct? But where is it given in the course or furtherance of business, sir? Principal agent transaction is a business transaction. Got it? So that's why. And next, what is the coverage? Only goods. Very, very important. Only goods. Please check the Bare Act. Fourth point, third point, only goods. Supply of goods by agent to principal or supply of goods by principal to agent, like that it is given. Is it clear? Only goods. So this is the discussion that we have made today. This is a summary of our discussion. Okay. Only import of service is from recipient point of view, rest and all is from supplier point of view. Fine. And we need to know the definitions. Meaning of goods, meaning of service, meaning of consideration, meaning of business, and meaning of related parties and meaning of distinct persons. That's a homework for you. I want you to read the definitions once so that tomorrow when we are discussing, so quickly we can complete. So you will have some time, no? How many of you are doing articleship? Wow. Okay. So evening, half an hour. No, you cannot find half an hour in your day. You can, right? Just read it once. These definitions, that is whatever we discussed today, those definitions, like goods definition, services definition, then consideration definition, business definition, and then related and distinct. Okay, va? Goods, service, consideration, business, related and distinct. 6 definitions you need to read. Can you? You want me to tell the page numbers or you will search? Expected. Page number 21 you have meaning of goods and services. Then page number 23 you have the meaning of consideration. And thereafter page number 27 you have business definition, and next related definition is in page number 34. Page number 34, related definition, and then distinct persons is in page number 39. Just if you turn the pages you will find the definition. And even if you are not understanding anything, please read it once. Read it once. Tomorrow you will understand for sure. I will make you understand. But you read it once. Okay. Daily spare some time, 15 minutes to half an hour. Whatever I am asking you to read and come, please read and come. I will not give much work and all, little bit of work only, so that you do, so that while sitting in the class, you know, you will be able to understand. Okay, if you have not seen that at all, then it will be difficult. That's why. Okay, thank you. We'll meet tomorrow. Take care.